Yeah, welcome to my channel. Today we're going to discuss about change in accounting date. Change in accounting date. It might interest you to know that change in accounting date is the only abnormal basis period that was not affected by the Finance Act 2020. Others were affected, like the commencement rule was affected, the cessation was affected, but change in accounting they remain the same. It remained the same. And I discovered that one of the major issue the students are having with changes in accounting date is discovering the year of change. Discovering the year of change. So we'll ask, how do you know the year of change? How will one know the year of change? It might also interest you to know that most of the students knows how to prorate, how to calculate, but it's just that the year of change is the issue. In this video, I'm going to show you the easiest way on how to identify the year of change. I'm going to use two methods to show you that. Stay tuned as we dive in. Now, change in accounting date. Where a taxpayer has changed its accounting date year end, it is the responsibility of the tax authority to what determine the basis upon which tax liability will be computed. The general practice of the tax authority is to what take the following step. Now listen to this step. Number one step: identify the year when the business changed its accounting date first failed. Identify when they first failed to prepare what? The accounts to the old year end. This represents the fixed tax year under commencement rule. Don't worry, when I handle the example, you will understand it straight. Just calm down and follow me. The second rule says, determine the two subsequent tax years. Now, when you discover that the year of change is 2002, let's say 2004, the two subsequent years to 2004 is what? You have 24, 25, and 26. So the two subsequent years are 25 and 26. That is what here is saying. The third step says determine the basis period for assessable profit and the corresponding assessable profit on preceding year basis using the old year end and the what? The 3 years identified in the step 1 and 2 above. Sum up the assessable profit for the what? The 3 years. Step 4. Repeat the third step above using the new year end. You understand? What here is saying that after you must have discovered the year of change, then you compute using the old date. Then you sum. Then you compute again using the new date. Then you sum. Then whichever is higher, then that is the one you are going to assess the profit on. Now let's take this little example on how to identify the year of change. Yes, this is Mr. John. Mr. John, yeah. So, Mr. John, year end is 31st October 2000. Year end 31st October 2001 to 2003. Mind you, here is having what? Year end, and here is what? Period ended. Now, let me tell you something. Whenever you see year end, it means it is what? 12 months. it is what? 12 months, a complete accounting year. Whenever you see period, it means it's either it is above 12 months or is below 12 months. Is that okay? Now let's dive in. Now, here now, we want to discover the year of change. And from the steps that we study, we are meant to understand that we should discover the first year the company first failed to prepare their normal accounting period. First failed to prepare. Now, this is easy way on how you can do this. I'm going to write this back. Here you have, I believe you know this thing that I'm doing now. 10, 2000. They want to check where they start the account. The account started first 11 to first 11 99. Yes, they prepared this accounting day to this place. Year end, this is what they prepare. The second year they maintain it. 11 2000 to 31st October 2001. They maintain their normal accounting period in the second year. Now, the third year they still maintain it. 11 2001 to 31st 10 2002. They maintain it. Then the third year, instead of them to prepare to continue the account to first 11 2002 to 31st 10 2003, they stubbornly prepare an account to first 11 22 to 31st March 23. You understand this? They prepare this account. This is the account they are maintaining. 2000, they maintain the account. If you watch it, 21, they maintain it. 22, they maintain it. But in 23, instead of them to prepare this account, they went ahead and did what? And prepared this. So which year did they first fail to prepare the account? It's 23. That is the year they first fail, because they are supposed to prepare this account here. Instead of it, they stubbornly prepared to match. So the year at which they first fail becomes 2000 and what? And it becomes your what? Your tax year. So the subsequent year here now will now be 2425. The 23 is going to access 22. 24 will access 23. 25 will access 24. Then you compute based on old date and new date. Are you getting it? Good. Let's check second example and see how it goes. I'll show you two methods. Here, let's do the same thing. Here is 2000, 21, 22, 23. Year end, period, year end. Now here you have 36, 2000. When did they start the account? Account will start from first 799. They maintain the account. This is the account they are maintaining. Are you getting it? This is the account they are maintaining. Then the 2001, they maintained it to 30th 6 2001. They maintain it. Reaching the third day, instead of them to prepare this same account, 2001 to 36 2002, they stubbornly prepared an account that end 1st 7 2002 to 31st 12 2002. Now, this is the year of change, because this is the year they first failed to prepare the account. Instead of them to prepare this, they went ahead and prepared this. Sorry, they went ahead and prepared this. Now, this is the year of change. So the year of change here is now what? 2002. The subsequent year is what? 2324. This 2002 becomes your tax year, which you are going to use to assess, compute based on new and old date. Are we okay with that? They maintain the accounts here. Watch it, they are the same. They are the same. Instead of them to prepare the same account here again, they now jump and prepare a different account. If you watch it, here is 6, here is 12. Prepare a different account. So the year they first fail to prepare the account is the year of change, because this is the year they first fail. They did not prepare it. They now prepared it. So this is the year of change. Is that okay? Can we go forward? Let's do the last. Then I'll show you another way of identifying it. Now, let's count back. I think this is the last example. Then I'll show you another way. Hope you can do this thing I'm doing. I'm just counting back when they start, because it's always good you get the end for you to get where they started the account from. Now they prepare the account normally here. Here the account is normal, 2001 to 31st December 2001. Normal. Now this is period. Now instead of them to prepare an account of 1st December 2002 to 31st December 2002, they now prepare an account of 1st December 2002 to 30th April to 30th April 23. So they maintain their account here, maintain it here, but instead of them to prepare this, I'm writing this out so that you know. Instead of them to prepare this, they now prepared this. This is for this is for this, and this is for this. They did not prepare this. So I put them out myself. This is the year at which they fail. So this year becomes what? Your year of change. So 2002 becomes your what? Year of change. Subsequent year are what? 23, 24. This 22 becomes your tax year, which you use to compute based on old date and new date. Are you with me? Now let me show you another way. Very simple way, but I just needed you to know this so that if anybody asks you, you can explain it. You can explain it. Let me show you another way. Let's start from this first example too. Now if you watch here, you see year end 31st December, year end period. Now you see 2000 21, 22, 23. 21, 22, 2000, 21, 22, 23. Whenever a date is arranged serially like this, just look here and pick the period end. That period end, the year here is the year of change. That is another way to know this. But if somebody say, okay, how did you know that here is the year of change? You can explain this to the person. That is because this is the year they fail to prepare the account. So it becomes the year of change, automatically the tax year. Wherever you see period, it becomes the year of change. So here now the year of change is 2002 because it associates itself with the period end. And the numbers here did not skip. They went the same way. Let's check the second one. Now, check here. You see 2000, 21, 22, 23. Check here, year end, year end, year end. You see period end. So the period end here becomes what? The year of change. 2000 and what? That, yes, becomes the year of change. Why? Because they did not skip any year here. They did not skip any year here. Once they did not skip any year here, just pick the period year and it becomes your year of change. The third one, year end. Now, 2000, 21, 23, 4, 5. You notice there is a skip of year. They skip 2002. It's not here. And mind you, the period is in 23. So in this case, you will not use this method here. It will not work. You will not pick the period side because this one did not skip year. That's why you are picking period as the year of change. But here, they skipped a year and the period happens to be here. You will not choose this. What you choose that missing year, that skipped year will be your year of change. 21, 22, 2000, 21, 22 is supposed to be here, but 22 is not here. You have 2, 3, 4, 5. That 22 is your year of change. If 24 is not here, the 24 becomes the year of change. But it's always good you know this so that you can explain it to people that this is why it is like this, because this one is an assumption. Though the assumption is correct, it's an assumption, at least 98% correct. But it's always good you dwell with this. I hope you understand this. I hope you understand this. Please, if you have any question, don't fail to ask me. Put it on the comment box and I will definitely attend to it. Now, don't fail, watch the second video of this, change in accounting date 2, and see a practical solved question that we are going to handle. Thank you very much for coming around and may God bless you.